got the room to quiet down and come back to their seats. That's a very powerful skill to have when we talk about the hospitality industry, which is where we're going to turn the conversation a little bit now. So thank you for that introduction. I'm Stephanie Ricca with Hotel News Now, and of course here with Alan Smith, Mohari Hospitality. So Alan, welcome.
Thank you. Pleasure to be here as the token hotel person.
Well, now, you know, I almost wish that we would have brought some slides of the Mohari portfolio to have going behind us, and I would encourage you all, not right at this moment, but definitely when you get back to your desks, take a look at the portfolio, because those are some beautiful bucket list hotels that I think really kind of ignite that desire to travel. Yep. So let's start by talking a little bit about Mohari. You know, you joined the company when it was a few years old. Sketch out the portfolio and tell us what attracted you to the company, its investment strategy, and the excitement of being back in that space.
Sure, thanks. So we're a family office-backed investment platform that focuses exclusively in luxury and lifestyle investing. And so I met the principal, Mark Scheinberg, when I was at Four Seasons. He had just acquired the Four Seasons in Costa Rica, and it's part of a large master plan community called Papagayo. And we developed a friendship that resulted in me ultimately joining him. I would say that, you know, his evolution and our evolution of investing has been, he was super passionate about the sector and jumped in with both feet by acquiring assets. And then he brought me on board to really try and build out this platform and create scale over time. And so at this point, if you look at the way in which we've approached it, we have operating assets like the Four Seasons in Costa Rica, the Four Seasons in Madrid, and so forth. We have a lot of real estate under development, including an extensive amount of what I'd characterize as branded residential, which we can talk about. And then we have operating companies that operate in spaces that we consider adjacent to and relevant to, call it, the overall luxury hospitality space. So we're a major investor in the Ritz-Carlton Yacht Company, where we're creating a luxury cruise business for Marriott. Last year we bought Tao Hospitality, that some of you, I hate to say this, at a younger stage in your life may have frequented them. But Tao we acquired because, you know, for one thing, they're a very large-scale operator of food and beverage and nightlife. We like the adjacency in terms of what I'd characterize as entertainment-driven hospitality and how that fit in our overall portfolio. So, you know, as I said, we're in a pretty wide range of activities, both real estate and operating companies, and are continuing to look for ways in which we can expand on that.
And you mentioned that entertainment, hospitality, luxury, and lifestyle. You know, these are all through lines, I think, that underscore the Mohari portfolio and the hospitality industry at large right now, which is that idea of experiential hospitality. Right. So, of course, in your portfolio, you mentioned Costa Rica, luxury beach resorts there, you've got branded residential and other luxury elements in cities like Rome, Madrid. Really, it runs the range, but that through line is experiential hospitality. What about that trend is attractive to a hotel investor? What makes you say, let's put our money here?
Well, for one thing, it's what the consumer is looking for. I mean, I think it's quite clear that, look, the luxury travel space, by the recent estimates I've seen, are, you know, $1.2 to $1.3 trillion. It's a massive space. And so while it may seem like, wow, you know, Mohari is like this really niche player, it's in the context of a very large industry. I think it's well chronicled that the high end of the hospitality market is enjoying tremendous growth. I mean, even just this past week, The Economist put out a piece on luxury hotels. The Economist doesn't often comment on the luxury hotel business, but it did so because of both the surge in interest from the consumer, but also, I think, on a relative basis, even though we didn't hear a lot of it about this from the panelists that preceded me, investor interest. And so we certainly, in terms of our approach to investing, where we actually do control GPs so that we're looking for LP capital for much of what we're doing in terms of the development space, we have not had any trouble lining up capital because there is a tremendous amount of interest for the space, so from the investment community and the consumer as well.
Right. That demand just really has no ceiling. It seems like...
Well, you probably just called the top by saying that.
Oh, no.
But,
don't worry, I don't have the power of the economist.
But no, I mean, it's really been quite impressive, I think, to us, even in terms of, while we don't have a massive portfolio per se, the performance of our properties and the rates we're able to generate and that sort of thing, it's been really impressive in terms of how that has proceeded. I think it also has just felt like for the very high-end consumer, there's, not much resistance to price. What's more important is access and quality. And so we certainly are very focused on those things.
And we'll talk a little bit more about some of the other areas where you've invested, like Mint House is an interesting brand that I think will dovetail well with where the conversation is going to go for the rest of today, especially around tech. But back to that idea of experiential hospitality and what guests want and will pay for, ergo money and development goes there. Talk a little bit more about the Tao acquisition, because that is different. You mentioned nightclubs, but it's day clubs too, for those of us who want to go to bed a little bit early. But restaurants, very high-end F&B concepts, not just Las Vegas. What does Tao bring to a portfolio like yours, and especially when you think about where you might expand it in the future and where you might put it?
Sure. So when we looked at Tao, we felt like we got a couple things. One is we got an operating platform which had a track record of success in food and beverage and nightlife that was at a scale that, frankly, there are few comparables for, and we really liked that. But the other thing that really impressed us was that we viewed Tao as a content creator, in the sense that just as there's streaming wars and people are looking for content, I would argue in the hospitality world, and frankly in the real estate world, content matters. And what do I mean by content? It's the ability to program space in ways that really animate it and draw people to it. And so we viewed Tao as an entity that was a content creator in that way. The business needs work like any business does, but it has really distinguished itself in its ability to do that. And so part of what it allows us to do is it gives us a different lens through which we can look at acquiring, say, for example, hotel assets. Things where there's a very distinct value add associated with the reprogramming of all the food and beverage and that sort of thing gives us a distinct advantage when we're bidding for it and we're trying to acquire those sorts of assets. The other thing that, being here in Midtown has impressed me is that the outreach we receive from owners of office buildings, I know there was discussion of office earlier, for us to work with them in, on vacancies they have, the creation of private clubs, which obviously is kind of ubiquitous these days. But again, it goes back to, how do I program space in a way that's really unique and differentiated, creates energy, and makes people want to go there? And so we like the fact that in a platform like Tao, we have that sort of operating capability to be able to play in that space.
And that really defines this idea of hybrid hospitality, which is part of, the topic of our session today. And I think it's interesting when you talk about that programmable content, bringing content to real estate, because of course you see that even in trends in multifamily and office is, interest in some of those extras, whether it's amenities or programming, and so bringing hospitality to that space.
Yeah, I mean, look, I think you're seeing it sort of everywhere, where themes around hospitality are being embedded in all manner of types of real estate. I mean, if you go to the Tiffany store on, Fifth Avenue, LVMH spent, what, $500 million on that property, which, it's stunning, it's obviously shows, but the experience you have is one that's very service-oriented and very hospitality-driven. And so that's one example, but I think you can look at countless others where this melding of service and hospitality with wherever, whatever kind of real estate you're talking about is relevant.
Right, it's almost back to that idea of mixed use, right? You can live, you can work, you can stay, you can sort of blend the types of activity that's happening in any given space. That's kind of how I define hybrid hospitality, and it's interesting to see it grow up from a developer's perspective, as this would be something to invest in.
Yep. No.
What's the next wave of that, do you think? We talk about entertainment hospitality, immersive hospitality, we have Ritz-Carlton yachts, we have all manner of property type. What's next?
Look, I'm not sure I'm not quite sure exactly how to respond to that. I mean, I think that you're seeing all manner of, call it, hybridization of these things. If you think about it, the private club phenomenon, which is, kind of everywhere. And certainly, if you contrast a market like London to a market like New York, it's very entrenched in London and very well developed. It's certainly coming to New York in a big way. It's already arrived, but continues to grow. That's, one manifestation of it. But I just think in general, there's just sort of a blurring of the lines that you see and how consumers think about it and what their expectations are.
Right. It always comes back to that consumer demand. We are going to leave some time at the end of our conversation for questions, so there'll be roving microphones a few minutes before we end. So if you think of anything, keep it in your mind and we'll have a chance to do that. Alan, I want to talk a little bit about Mint House. We talked, speakers on the stage earlier talked about that multifamily piece of CRE. Mint House is a unique brand, if you will. The description is a tech-enabled residential hospitality company, and the model really kind of skirts the line between traditional hotel, short-term rental. Talk a little bit about what is attractive about this model from an investment perspective and where it's going.
So Mint House is a startup we invested in. We led a Series B round in the company, and the way to think about it is it's Airbnb, but it's a hotel format in Class A multifamily. We were drawn to it because we viewed that as being a space in which there was meaningful opportunity. And I think part of it is there have been a number of players who are playing in the short-term rental space. My view is no one's sort of figured out a business model that's perfect yet. Some of the, participants to date have adopted a bit of, call it the WeWork model. I'm sure you guys are familiar with some of the players in terms of really trying to arbitrage on a short-term lease versus long-term lease. And that approach has been, I think, challenging. Ours is a management contract model, so we're contracting with the landlord to manage a block of units. And I think part of what we've seen over time is there's a growing receptivity to it, so to just the concept of operating buildings with the short-term rental approach. Increasingly, we have opportunities to manage whole buildings as opposed to, say, 40 units within an existing building. We have recently had a number of instances where buildings have been refinanced successfully, where we're part of the income stream the lenders are having to underwrite. And I think that's obviously been important because in the capital market community, people are kind of thinking, so how do I make sense out of this short-term rental income stream? And it feels like people are increasingly getting comfortable with that. I think that we are certainly getting more inbound inquiries from what I'd characterize as more institutional owners of multifamily. You know, I think the value proposition for landlords is pretty straightforward. By using our approach, we target at stabilization, delivering to the landlord 2.5x of what they would have otherwise received as just a standard apartment lease. The value, in my mind, that we bring in the most meaningful way relates to sort of the whole revenue management and distribution side. That's the real intelligence around this, if you will, as opposed to the process of managing the units on site. Yeah, you've got to have a hospitality-oriented orientation to service the guests in an appropriate way, but that's frankly easily conveyed to people or trained. The hard part is getting the kind of intelligence and the technology around the pricing of the inventory, in my mind, and that's where we're particularly focused.
Is the Mint House portfolio primarily conversions from apartment or ground up?
We started with it, by and large, being conversions of existing units of existing buildings. Increasingly, the focus is on development-oriented projects, and especially where we're doing full building opportunities. Some of them being, again, in terms of office. We have a project in Washington, D.C. that's a conversion of an office building into a residential project, and it's going to be 100% a Mint House short-term rental hotel, if you will. So, so increasingly, our pipeline is development-oriented. I think in an ideal world, we would strike, call it a more strategic relationship with a large multifamily owner, operator, if you will. But for now, we've been very focused on just the proof of concept by doing it sort of a building at a time, if you will.
It's been interesting to look at the evolution, how that brand evolves from the real estate standpoint.
Yeah, I mean, look, we've got a long way to go. It's a small company, but I think that we have a good business model, and it's a space that's relevant to people.
So right now, Mohari is in US, Costa Rica, and Europe, correct?
Yeah.
Those are very different markets from development perspectives. You know, talk about conversion versus ground up, and how investment gets from point A to building a property out of the ground or converting one. What attracts you to these three regions? What's next?
So let me start with Europe. We're very active in Europe, and there Sultana Regal, who was a former colleague of mine at PGIM, was talking about GP relationships. So the way in which we've operated, given that we're a small platform, is we've bought into development companies, formed GP partnerships, and so really use them as our capability on the ground to execute. Certainly from my experience at Four Seasons, one of the things I gained a healthy appreciation for was how hard it was to get into some of these markets. And so if you identified people who had a unique ability to do so and then deliver the projects in these markets, because they're not easy to build in, there was great value in that. And so in Europe right now, we have projects, and these are a combination of ground-up development and adaptive reuse of either existing hotels or commercial buildings. So we have projects in Lake Como, Florence, Puglia, Rome, Tuscany, Lisbon, and Paris. A heavy Italian, weighting for sure. But it's a market that we really like the economics associated with where we can ultimately get into in terms of our development cost relative to where the market's trading for these assets. And so there, that we're working with, Four Seasons, we're working with Marriott and some of their luxury brands, Baccarat, which is a Starwood hotel brand. And we're exploring the idea of whether they're to create our own brand, given that sort of proprietary pipeline. It gives us a lot of optionality as to where we go with different brands and so forth.
So you mentioned, of course, city destinations, right? Madrid, Paris, but then also more resort locations. What's your take on urban versus resort at this point in the cycle, and for, if you look 5 years in advance, knowing where the demand is coming from and where capability to build and convert?
I mean, look, if you think about the places that I mentioned, one of the things they have in common is they're all hard to get into. A market like Lake Como is very hard to find property to convert and to develop. And you can say that for almost all of those. So in some respects, you could say it's less about resort versus urban and more about barriers to entry to get in.
Sure.
Now, all of those markets in Europe have a very heavy leisure orientation, and we like that. But part of it is these are also, just from personal perspective, really fascinating projects. There's a historical dimension. We have a project in Paris that we will position as a luxury hotel. It's a combination of 3 buildings within this block. On the interior of the building is a maison from the 1700s that Marie Antoinette visited while she still had her head. And so there's just a historical quality to these and the capacity to create a narrative and story. One of the things we talk a lot about in what I'd characterize as high-end hospitality is the capacity to engage in storytelling. And people want to go to a place and feel like it's special and it has a certain kind of soul and so forth. And these projects that we're involved with, certainly in Europe, provide that.
Right, and Costa Rica is another place where you're all in, right? And Papagayo Peninsula?
We are all in. It is a very large, in total we control 2,000 acres. There is, the first 1,000 acres is largely, I would say, developed. Later this year we will be completing the development of a Ritz-Carlton Reserve, or Ritz Reserve. And that really will represent kind of the conclusion. We'll have an Andaz hotel, a Four Seasons hotel, a Ritz Reserve, very extensive high-end residential. And so there we have the critical mass of both accommodation, housing, and amenities to really draw people to it. We are currently master planning a second 1,000-acre peninsula that will then will develop over, it'll probably be a 10-year build. But the importance of all that is it really creates critical mass. And one of the things that I've always found kind of interesting about the hotel space is, on the one hand, you're competitive. Four Seasons is competitive with Marriott in terms of Ritz Reserve, and yet in an instance like Papagayo, frankly, they benefit from having the critical mass and scale and what it all does for creating a true destination for people to go to. And so that we're very focused on. And in fact, in this region in Costa Rica, Steve Case has a project called Cacique, where they're developing a Waldorf Astoria and really an extensive wellness offering. And then just down from that, Discovery Land is, for those of you who know Discovery Land, is developing one of their resort communities. And so there's a lot of activity in that space, and I think we'll all benefit from the scale that is created there.
Well, there's that idea of scale and hybrid hospitality really adding the value to what you're putting in terms of investment. So how about the U.S.? What's your footprint here, and what are the challenges right now?
So the U.S., we have less, although our investment in Tao is very substantial for us here in the U.S. But we, for example, are involved in the Four Seasons residences in Washington, D.C.
And that's a standalone residences without attached hotel, correct?
That's correct. It's adjacent to the Four Seasons in Georgetown, but it is not physically attached. And it's the conversion, well, we just demolished a large portion of it, but it was a power plant that, if you've been to Washington, D.C., you may have seen it. It was a power plant that sat next to the Four Seasons. We're partners with Georgetown Company. It took them 10 years to get to the point of being able to start construction. And, what I found, I knew of the project when I was there. what I found really compelling about it was that Washington, D.C., while being capital of the United States, great country in the world, really does not have high quality, what I'd characterize as luxury residential. If you go from cities around the world and compare the quality of the highest end residential in London to, say, Washington, D.C., it's not even close, let alone the price point. The highest price point in Washington, D.C. is maybe around $2,000 a foot. On a global basis, that's not a lot. And so we viewed there to be this opportunity to work with Georgetown, really create a unique product, which we will. Part of what I also liked about it is it's relatively small. It'll be around 78 units, 75, 78 units. And we think we'll just completely blow away, any pricing parameters that have existed before. And I think people will view it as, okay, because it's really a global buyer in many respects, relative to what they could pay in other places. It seems like a veritable bargain. And yet if we hit something like $2,500 or $3,000 a foot, it's a wild success for us. So we feel really good about that. We're involved with a project in Lake Tahoe, where we are privatizing a ski mountain with Discovery Land and a US-based partner of ours, JMA Ventures. And so there, it's for, if you've heard of Yellowstone Club, which is a Discovery Land project, it is think of it as a mini version of that in Lake Tahoe. Again, very hard market to develop in, high barriers to entry, really a market that draws from Northern California, Southern California. And the scale of it is something that we think will be really attractive to people.
Scale, experience, high barrier to entry.
Yeah. I think the other thing is just, and some of this is led by our involvement in Tao. We're very focused on sort of some hub markets, Las Vegas, New York, Miami, London, Dubai. And so certainly in the US right now, we're very focused on continuing to expand our presence in Las Vegas, which is extensive through Tao, and then Miami. Miami and New York are both markets we're very focused on.
Oh, I feel like we could talk about Las Vegas for an hour up here, but our time is running out. We're gonna turn the floor over to questions in just a minute, but I wanna touch back on that idea of branded residential development as part of luxury hospitality. It's been fascinating to watch that piece evolve, and it feels like it's absolutely a necessity right now in doing most luxury hotel developments. Four Seasons, of course, was one of the early companies that did it and did it well. What is your outlook for that idea of branded residential units along with luxury hospitality? And how do you do it right versus how do you just do it?
So, look, it was fascinating to me when I went to Four Seasons. Four Seasons' first residential project was done in 1985, in the mid-'80s, in conjunction with their Boston hotel on the Boston Commons. So the company's had almost 40 years experience in, call it the branded residential space. And yet when I got there, say in 2013, it was obvious to me that the company sort of treated it as if it was a hobby. And yet when I would talk to the developers of the projects, they would talk about the residential and the hotel. When I talked to people in the company, they talked about the hotel and the residential. And the fact was 80% of our pipeline, and I think this is still the case for them today, 80% of the pipeline is a mixed-use hotel residential project, whether it's resort or urban. The only two hotels that I was involved with while I was there that penciled without the residential, and I mean on a rate of return where people in this room would be enthusiastic about it, with a project that we did in Orlando that's on the grounds of Disney, and then a project in Dubai on Jumeirah Beach. Other than that, by and large, you really needed the residential component to drive the development profits so it would get built. I think what I've observed certainly more recently is what I'd characterize as the sort of indiscriminate application of brands to residential. So I think we could probably all agree that there's sort of a natural connection between Four Seasons as a luxury hotel operator and Four Seasons as a luxury residential owner or operator, especially when they're combined with one another. I think increasingly what has struck me is that brands that actually don't necessarily, they may be perfectly good brands, but they frankly don't have a lot to do with residential or hospitality or that sort of service, and yet they are putting them on buildings. I don't quite get it, truthfully. I do think that there's the opportunity for the right kind of brands to drive premiums on sale prices. If not premiums, at least better velocity. And I think that's the other thing that has struck me is that these brands, whether it's Four Seasons or any other brand, on an A-plus location, likely isn't going to actually drive a premium in terms of pricing. It certainly can help with the velocity, but you know, in those instances, it was really the location is what's of greatest value.
Right.
I think you will see, certainly among the luxury hotel companies, they're going deep into the luxury residential space, and I think they'll continue to. And I think you'll continue to see people who are more peripheral try and slap their name on it in the interest of expanding kind of the community of people who connect to their brands and earn licensing fees.
Yep, always the case in this space, right?
Yep.
Any audience questions? Okay, we've got one down here. We've got a mic coming your way.
Thanks for being here.
Sure.
Two quick questions. What do you think about the saturation of branded residential in Miami? Do you think it's saturated or not? And secondly, what are you doing in Madrid, and what do you think of the prospects of branded residential in Madrid?
So it's funny, and I don't pretend to be an expert on all the branded residential in Miami, but if you were to, when I was making the comments about the indiscriminate application of brands to residential, what comes to mind for me is Miami. Because I do think that there are a number of those where I just am left scratching my head. But I don't have the data in front of me to kind of know kind of where the market is right now. It doesn't seem to, when we say saturated, that often means oversupplied. I'm not sure that it's meant that those projects haven't sold. To me, from a consumer perspective, I'm not sure what it means to have. I think Mercedes there's a Mercedes resident. It's probably a successful building. I mean, no offense to anyone. I drive a Mercedes, so it's a great brand. But I don't know what it has to do with, you know, a residential offering and, you know, if you're the owner of it, the eventual resale of it and so forth. So it's more that. As it relates to Madrid, love Madrid. We own this project called Canalejas, which is a Four Seasons and a luxury galleria. Madrid, you know, is a city that we're very bullish on. I think it's benefited in some respects certainly from a hospitality perspective, from some of the dysfunction in Barcelona, where they've adopted moratoriums on new hotel construction and so forth. And in the area that we're in Madrid, the neighborhood is just continuing to improve from when the Four Seasons was originally open. And so Madrid is a market where, frankly, we've been looking for we've been exploring to do a luxury residential project. We've explored it with Four Seasons. I know that they're looking to do more in that market. But I view, part of what I liked about Madrid was if you compare it to, say, London, Paris, especially on the hotel side, the rates you get in London and Paris are much higher than the rates you get in Madrid, and yet the value that you have in Madrid, I think, gives you a lot of headroom to close the gap between those. So we're probably charging around €1,000 a night now. I think we have, you know, what people see in these other European markets gives us the opportunity to continue to push those rates. But we really like Madrid.
Any other questions? I think there's one back here. Yep. I apologize for pointing.
Hi, good morning. Thank you for being here.
Sure.
My name is Sienna Robinson. I'm a first year at CBS, specializing in real estate and looking to go into hospitality. I'm curious to know what kind of qualitative inputs you consider before making an investment or moving forward with a deal, outside of, returns.
Qualitative. Well, it's all grounded in returns, frankly. I mean, we're very return driven, if you will. And so it's got to pass that test before we go any further. We certainly are very interested in how the projects that we undertake positively impact the community, both in terms of the physical community and elsewhere. Frankly, as an aside, I mean, part of what we do just as sort of our operating approach is we have a local philanthropic program that wherever we invest, we're sponsoring philanthropic activity to support the community. But I have to confess, I mean, our primary lens through which we look at the investments we make is a financial lens. That's the business we're in.
We had one more up here I think we'll have time to take.
Yeah, just taking a step back from the family office perspective, the Scheinberg family, how do they think about investing in hospitality and the returns versus other asset classes? Do you have issues ever getting capital, or is it a relative return basis would be helpful?
Yeah, I mean, look, it's, when I joined them, Mark Scheinberg, who's I interact with, I talked to him about the fact that, look, I was, at Four Seasons for 5 years. I was at what's now PGIM for 25 years. And so I did a lot more than hospitality in my career. And if we wanted, I was pointing out to him, we could have a broad platform where we did lots of different things. We could consider different types of property. We could consider credit. We could do a variety of things. It was just, as we were getting started, let's decide what we want to be, and then we can go from there. And Mark and I went back and forth on this a number of times, and he finally came back to me and he said, I get it. We could do all this stuff, but frankly, I find it boring. And I want to be passionate about what I invest in, and I love the luxury hospitality space, and I really want us to be focused on that. Now, within that, we definitely look at relative returns. I'm not the CIO of the family office, so I don't have perfect visibility into how they make those trade-offs. Certainly with some of the deals we've been looking at right now, frankly, we're looking at a project in a major city here in the US, and the terms we're getting on the senior debt are, for example, 575 over, which is to me basically a sign that says, I really should be in credit rather than real estate equity. But the fact is we're set up for a certain purpose. We're specialized in investing in, by and large, real estate equity. It doesn't mean we just put our heads down and don't think about those sorts of credit opportunities to emerge. Would we do it? Yeah, we're looking at some now. But our principal focus right now is building out a real estate equity and hospitality-based investment platform that by and large is focused on the equity side, whether it's real estate, private equity, or truer private equity. Does that help?
That's a great note to end on. I have one last question
Yes.
for you, Alan. Have you been on the Ritz yacht?
I have.
Tell us about it.
I have. Look, it's very nice, as you would expect. It's been a fascinating exercise in working with Marriott. I mean, the truth is this is a pure startup. I mean, Mint House is a startup. It's a small scale. Ritz-Carlton Yacht Collection is a startup. Startups seem to have common challenges associated with them. You're creating the organization. You're creating the business. In this case, it's a hospitality operation. It's a maritime operation. It's super capital intensive. And yet, the Ritz-Carlton Yacht Collection is what I would say is the first of a new generation of luxury cruise ships that are going to enter the market. So Four Seasons has announced their intention to do it. Oman has has announced their intention to do it, Orient Express, and so forth. So it sounds like a lot. The fact is it takes a long time for these ships to be delivered. Each one is relatively small. There's lots of space for all of us to play. But the ships are, beautifully appointed. They would be top of the market for the cruise industry, but they're very small by comparison, and it's a very different experience. I've never been a big cruise person, but for those who are, it's definitely a top of the market experience.
Whole different type of real estate,
Yes.
right? Please join me in thanking Alan.
Thank you.